Hey everybody, this is Dr. Tom Carr, aka Dr. Stoxx of drstoxx.com, coming to you live from the live trading room. And if you're interested in joining me and a bunch of great traders and you get to see everything I'm trading throughout the day, I give you the stock ticker symbol, the entry price, stop price, target price, reasons for the trade, technical chart, updated positions, and all sorts of stuff, as well as some trader training. I jump on the live mic once or twice a week in both of my live rooms to do a little bit of talking about the charts and strategy and so on. And if you're interested in that, and everybody in the room is just amazing, so you'll be in good company. Go to drstoxx.com, DRSTOXX. Right? It's not doctor spelled out, and it's not stocks with a CK. drstoxx.com. Go to the subscribe menu, scroll down to the live trading room. And if you want to add on our new live options room, only options, only long calls and puts, then you can do that at a 40% discount. All right, let's jump over to charts because we've got a nice looking day going on here. It's maybe not much more than some back and fill or relief rally or dead cat bounce off the deep cut lows. And I don't think that's the case, but we do have to be very careful now that we are back up to the 21 and just under the 50. And we got all the way down well below the linear regression channel, which is beyond 2.0 standard deviation. That's a big stretch, right, between the where the price normally stays within, and way beyond that range is what we got last week. And then you expect the bounce back to revert to the mean. That's what we're getting today, and I'm hoping that it's not just that, but it could be just that. And we won't know about that today because today is the bounce back and we're hitting the mean today, the 21 EMA, the 50, and now back into the linear regression channel. But if it is only a reversion to mean, then tomorrow we should see a pause, gives us some time to kind of assess the market and take profits if we need to. And if we need to put on some hedge positions, we can do that tomorrow. Then we'll have to have confirmation on the downside starting Thursday. Thursday, the market's closed. Friday, you get a half day, so it would probably not really start until Monday next week. So all that's to say we've got plenty of time. And we're right up against the Thanksgiving break. So Monday, Tuesday, Wednesday, Thanksgiving, they're all full market days. All tend to be very bullish. If you look at the average gain for the S&P 500 during these 3 days, and then you annualize it out, it's like 60-70% return annually if every 3 days were like the 3 days we're seeing this week. So it's usually big outperformance, and especially so after the market has been pulling back, which it has done for about 4 weeks now. It's an ABC pullback. It's a little bit further than we would like it to see because it went below the 50. We got kind of close to the 100 period moving average, but still well above the 200. Got below the LRC, got below some levels of price support. So that adds a little bit of caution into the mix here. However, when we were down here on Thursday last week and then even undercut those lows on Friday, and we looked over at the Fear and Greed Index, we looked over at the NAMO, the McClellan Oscillator, we looked at advanced decline lines, we looked at breadth indicators. Everything was so uber bearish that we got down to like 6 or 7, I think, on the fear index, which you don't normally see that when you're still 4% or so from all-time highs. So very unusual reads there, and the put call ratio is way up. That's usually a pretty good sign that the bearishness is about to come to an end. McClellan Oscillator was way down. And it got to a level where we typically see nice bounce backs. And so everything was pointing toward an intermediate term bottom, and I think that's where we are. I'm going to stick with that until I see proof otherwise. So here's the path of least resistance. Now we're probably going to get some modest bullishness. Rest of the day, I think we'll hold near the highs. Tomorrow, maybe a little bit more upside. Maybe we get just a peak above the 50 period moving average. Let's zoom in a little bit on this first. Okay, so just a little bit of bullishness tomorrow, maybe Wednesday, because Wednesday's going to be a light volume, not many people trading. Everybody, all the big desk folks are on their way to the Hamptons already to fight the traffic. And so Wednesday is likely to be tight, choppy, not really much going on. And then maybe on Friday, Friday's a half day. Nobody's really trading. I'm not going to be trading on Friday, the half day. So you're probably just going to see a nice, good hold, tight little range. It's going to be a frustrating day if you're trying to, even if you're trying to day trade. And then we might get next week, early next week. I think if we get a little bit of a pullback, okay, a little bit of a pullback, we get down to maybe the 30 or the 40 Fibonacci retracement level, and then next leg higher into the middle part of December. If we get another leg lower, I don't think we're going to see it until mid-December. And I'm just going to hold to that. And frankly, that's so far away from right now, I'm not even going to worry about that. So that's my path of least resistance for the S&P 500. In short, don't worry about it this week. We'll see where it's at next week. It should be okay either way. And we can enjoy another couple of weeks after that of modest, fairly consistent upside. Same is true for the NASDAQ. It's exactly in the same spot. A little bit more upside, some hold for a couple of days on the light trading days, maybe a little bit of a dip early next week, and then right back up again. I'm kind of thinking, and I'm not sure if I'm right about this, I hope I'm not, kind of thinking that the December 9 and 10 FOMC meeting will get likely a rate cut coming out on December 10th, that may be a sell the news event, in which case then we could get a week or so of some softness in heading into Christmas. And we've seen that a lot of times. For some reason, right in the middle of December, even in a nice, good, strong bull market, we tend to get a little bit of shakiness. And I think that's probably, end of year positioning, right? So you've got big traders that maybe have some losses. So they get out and get rid of those positions. They take their losses for the tax purposes and so on. And then you get some exaggerated moves to the downside. And then after that, things kick up again because people are buying back some of the laggards that they got rid of earlier in the year, and they're buying those back for the next year. So that tends to happen in the middle toward the end of December. So we can expect maybe a little bit more volatility then. The small cap index, I've been saying no-go zone, no-go zone, no-go zone, but I think today's we're on the verge of changing that, I should say. We're not quite there yet, and we do have some calls on in this index in the options room that we put on earlier today because I like this move, and I think it's a pretty good lower risk positioning here. So we haven't broken out of the pullback trend just yet. We're still well below the 50. We're right at the 21. It did get well below, like the other indexes, well below the LRC, well below both of those moving averages, but I think this has a very good chance of breaking out to the upside and testing the 50. So that's kind of what we're looking for with those calls. Now, let's talk about Ether and Bitcoin because these guys have just been awful for weeks now, maybe even months, right? All-time high came early October, and it's just been very, very sharp downhill from there with hardly anything in the way of a relief. And every relief has come right back up into resistance, and then it's right back down again. And that's a very nasty, long slide, testing the resolve of the bulls. If you're still, if you bought up here around 120 or higher, and you're holding down here at 88, pat yourself on the back for being a diamond hands person. You've got diamond hands. That's what we say about people that buy and never sell, no matter what. So pat yourself on the back for that. Now, I think eventually you will be rewarded, but it could be a year before we see new all-time highs again in Bitcoin. I'm just afraid that, just not only the way the chart is going, with the selling pressure so strong, and then we're reading everybody and every uncle and every grandmother is selling their Bitcoin positions also. I don't see anybody going short Bitcoin. I just see a lot of folks who are wanting to get out before they bought maybe at 20,000 or 30,000 or 50,000. They just want to get out and take their profits and go buy their property in Bermuda or something. But the path of least resistance for both Bitcoin and Ether is a soft relief rally. That's kind of what we're seeing. The starting of today. You could trade this if you want. And if you're going to trade it, I would think I would trade the Ether rally rather than the Bitcoin rally. I think the Bitcoin is probably going to peter out more quickly and go down more sharply in the next leg. And Ether has a little bit more structure going on here. The drops have not been as far, they've not been as fast, and the bounce back up today is much stronger. So my little, I mean, we did hit the support line, and we are bouncing as I had predicted, but it's much stronger so far than I thought it would be. But I do think we'll get up to this resistance trend line. Not exactly sure where it will touch it, but then right back down again for a new leg lower. So I think if you're going to trade this bounce, see it only as a relief rally, short term, maybe a week, and then take your profits, get out before the next leg lower. And if it gets up here to the 21 or the resistance trend line, I think I would start lightening up. Now, I'll be totally wrong in all of these. If these resistance trend lines break to the upside, we have to see a close above it, and then we have to see a higher move the next day or within 2 days to confirm. And if that happens for both Bitcoin and Ether, I will change my bias altogether. But for right now, it's just a no-go zone. I don't even want to short these guys. I just want to stay away until they show me something better. Now let's talk a little bit about gold. I think gold is going to be coiling up quite nicely. This is actually a nice looking bullish setup. I'm not quite sure why I just don't get bullish about gold right now, but I'm not bearish either. In fact, I don't think it's really going to get below this trend line right here. I'm just seeing that it's going to consolidate and go sideways for a week or 2 weeks into the FOMC. Once we get clarity on that, if FOMC comes out and is very dovish, they cut 25, they talk about 25 in February and 25 in March or whatever the other meetings are, then I think we'll see gold do quite well after the meeting. Until then, I think it's going to be flat, choppy, and not really much upside. And then if you're going to buy today, you'll probably be down tomorrow, that kind of thing. In part because the dollar's been very strong. Gold doesn't like a strong dollar, and in part because we've got inflation data and labor data that it hasn't come out yet and is not going to come out yet. And so gold doesn't have much of a macro to trade against. So that's, I just think for those reasons, it's going to be bound. Its hands are tied for a little while. Now, silver is pretty much the same story, but actually like this chart a little bit better. And I do think if you have to buy a shiny metal, this would be the one I would buy. So it had the double top. There was bearish divergence up here off the second one, but it's been a pretty soft pullback. We're still above the 21 period moving average. It's a nice looking 45-degree angle. It's not moving sideways. It came all the way down, tested the 50 on Friday, and bounced nicely up into the close and follow through today. And I think this is pretty good shot for getting back up here, breaking up the double top and getting up to maybe 56 or so. So I like silver, and you can play that with either AQG. I'm just blanking on the ticker symbol. AQG is your 2x version for silver, or the best miner for silver is PAAS. Either one of those would be good. We are short natural gas. It's been working out well so far, although it hasn't moved a whole lot. Now, I don't know why exactly this daily chart is showing a higher high there, because that's not the case. It's in fact printing on the 2-hour chart a lower set of highs. And then it broke down through support, rallied back up again to close the gap. This was last week or over the weekend maybe, or overnight. And now right back down again to test the lows down here. And I suspect it's going to get below 4.5 by the time this move plays out. Yields are falling, which is a good thing for bonds, and falling sharply now. This is a lot sharper than it was when I last looked at it. And this is a weak little move for the yields, right? You've got downhill trend, very clearly downhill trend. You've got the relief rally. First leg is strong. Second leg prints kind of a double top. And now we have the breakout with volume starting to pick up. So If you want to go long bonds, I wouldn't stop anybody from doing that. You want to play it with TMF, which is the 3x version for the 20-year bond fund, and that's a good place to hang out for a couple of months, I would think, into the new year. All right, let's look at. I don't only want to do the mags. I want to go straight to my greens list because there are some mags on this list already, and the home builder. This is the daily chart. Yeah, the home builder set, and XHB is just home builders, and we're in nail some calls in the options room on this big green stick that printed on Friday. And this is more of a thesis trade than a chart trade, right? The chart is starting to shape up, but it's really much more about falling rates, pent up demand for homes, falling home prices, and falling mortgage rates. When all of those add up, and a dollar that has been really strong, maybe it's going to start to weaken a little bit. All those add up to a relief rally in the home building group. Nail is a little different because it also includes Home Depot and Lowe's and some other supporting material stocks that sell to the home builder industry, and so it actually has a little better chart than this one. But anyway, big volume stick, not quite up above the trend line, so it's probably not going to get us too excited until it gets up above there. And then it's going to start to clear out some of that overhead supply. And it's probably going to be, 2 steps forward, 1 step back. But I do think that from a macro perspective, it's a tailwind. Everything's a tailwind for the home builders. This is a solar play, and the solar group has been surprisingly really good. So you're going to find FSLR, you're going to find CSIQ doing really well. I'm not sure where ENPH is. That's the semiconductor play on solars. And this one is in the solar industry, but it's more of a picks and shovels kind of play on the solar industry, and I like it very much. Very good. It's got the second lowest valuations. FSLR is the lowest. And its growth rate is just a tick lower than FSLR, which has amazing growth as well. But if you look at overall IBD metrics, it has stronger IBD metrics, and I think probably the better chart of the two. Now, we actually have FSLR calls in the options room, and we just bought some shares of this one in the live trading room. Yeah, and this one looks good. Really good, right? It's just a falling wedge down into the 50, the pink zone, uptrend. All the uptrends look great. Cycles are right where you would want them. All the short-term cycles have bottomed out and are curling higher. The long-term cycle looks like it's heading toward the bottom, almost there. And the MACD, which is below the 0 line, is starting to pinch closer. That's all that you want. The only thing I see a little bit problematic here is that the volume balance the last couple of weeks has been leaning a little bit more on the distribution side than the accumulation. As DataDog, keep an eye on DataDog. I think this one has a really good bounce back move in it. It got shot way down. So big up on earnings. You want to see that. Close the earnings gap. You don't want to see that. But I think that this big slide down here on Thursday last week, which is not really on any news that I could see other than one of the names in the space, which is Palo Alto. I'm not sure if they'd had earnings or if it was news about a purchase, a big purchase. Anyway, they went way down and Datadog went down with them. And so I don't think this is a fair valuation for the company. We hit the 50 hammer candle on Friday and reversal bar looking today. And I wouldn't buy it here, but it does look like it's ready to get back on track. We are long NVIDIA somewhere in one of the rooms. I think we have calls on in the options room. And yeah, that big gap and crap on earnings. But the earnings were so good. I mean, they were off the charts, raised everything, beat all expectations, and there wasn't a weak spot among them. So, there's nothing wrong with the company. And, everybody has been so worried about AI last week, and now everybody's talking about the amazing potential of AI today. So, what a difference a weekend makes. I think NVIDIA, maybe it needs to shake off a little bit of that earnings dust, but it's going to do well soon. Amazon, I'm not so sure I'd be a buyer down here, but I know a lot of folks in my pro trading group are out buying shares. I'm not opposed to that at all, but I think there are better setups. It's just that it's come back down quite a lot, all the way down to the 200 period moving average. And that's usually not where you want to buy for swing trades. For long term position trades or in your investment account, oh, absolutely. Get it down here at the 200 because that doesn't happen very often. But for swing trades, I like to play off the 50, not the 200. I really like this frog setup. I might make this one official, but I did nibble a little bit ago during my lunch break. Three bar reversal and a good looking volume. This is what we call a power gap. So a power gap is where you gap up on earnings usually, some other good news. You come down to test the gap, but you don't go down into the gap. Or if you go down into it, you go down a little bit and then right back up again. Where we saw with DataDog, it came all the way down and closed that gap. That's no longer a power gap. It's only a power gap if it holds the gap open and bounces out, and that's exactly what we're getting here with Frog. We had one, what was the biotech that we were in a couple of weeks ago that did so well for us? It was exactly the same setup. Power gap, test, we bought the test, and then boom, like 4 days in a row, just up, 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 no matter what the market was doing, because the market was coming down. We hit target in about 4 days. So that was a nice one. INSEE is a biotech also. Very nice looking chart. Very strong. This is a momentum chart. So we're not looking here for, pull back all the way to the 50 period moving average, and we're not looking for patterns or anything. We're just looking for a continuation of momentum. And that looks to me that's starting today. So we have this big, where's my drawing tool? We have this big rounded bottom thrust up, soft rounded bottom, and then the next thrust up should be happening, and maybe that's starting today. Here's an energy play. It is down here in the pink zone. It's forming a bit of a base. It's not really a buy underneath all of this resistance, but it's one I just want to keep on my list. This is one of the best looking charts out there, in my opinion, and it came from a scan that I run in my market surge software from IBD. 3-bar reversal, strong looking bar today, good volume balance. Short-term cycles are rolling higher. MACD is pinching. I don't like everything about it. It's just very, very strong chart. And the pullback here is soft. It's not even a 45-degree angle. Nowhere near closing below the 50. We're back up above the 21. Everything just looks great. Plus, great growth, great company, and all around. PLTR, I think, is getting close to a buy, but I don't, and it's a 3-bar reversal today, so it's probably going to get a good, healthy bounce, maybe back up into the 50, and that would be a 15-point move on a $160 stock, and you could leverage that with some calls if you wanted to. I just think, however, that it's got a little bit more work to do. It's got a little bit more work to do, and I don't think I would swing trade it, except for something short-term, until it gets back up above that one. VRT looks good. It's a little bit further down, but a 3-bar reversal like CEG. It's got some work to do before it gets out from under some of that resistance. Keep your eye on this little one, this little wolf. This is it a uranium play, a nuclear play, something like that? I think it's in that space, the nuclear space. It's not a perfect chart. There are some problems here, but it is printing on a 2-hour basis a higher low. It just needs to take out some of these intraday highs and or the resistance trend line. But this is one that can really move 20% in a day. So keep an eye on that one. Last one I'll look at is CLS. Yeah, this one also looks good. Looks a lot like APH, right? Same soft 30-degree pullback, 3-bar reversal off of the 50. Good looking volume balance. MACD is starting to pinch. Yeah, I like CLS. CLS can be a really big mover, a lot of fun to trade. So it's just a big green stick today. You know my big green stick rule. The rule is that you don't buy big green sticks when they're already big and green because you'll tend to get a much better price the next day or 2 or 3. as the stock pulls back down again and retests some of those intraday places of support. But the exception to that is when you get a big green stick at the end of a pullback, which is kind of what's going on here. That could be the big green stick. You can see how you could have gotten much better prices a few days later. This is another big green stick. So I'm not sure if that kind of negates the previous one or the previous one negates this one. I don't know. But here's how I would play it, since it is a very nice looking chart and it's a fun stock to trade. Nibble, nibble, nibble here with a view toward adding if it does pull back. And I wouldn't necessarily add on the way up, but then you at least got a foothold and you can enjoy a bit of run. All right, that's all I've got for you guys today. Let me jump over to the trading main room. And I see a few ticker symbols there, so I will look at those together with you. TTD. Let's do TTD instead of the leveraged fund, since we'll get a better chart. All right, so this is a good illustration of a chart that goes on my no-go zone list. In other words, there's not anything here that I like, unless you're short. If you want to short this one, I think you probably have some more downside, right? Because it did just recently break that level of support, and it hasn't fallen too far below that line. One of the early tells that this wasn't going to do very well is it formed this nice looking inverted head and shoulders, and I know that pattern very well because I was posting it all over social media and in both of the live rooms, and I said, you know, look at this, look at this. And I think we even did buy a little bit of maybe the TTD or TTD was it TTDU, the 2X version, or maybe some calls in the other. I don't remember exactly right, but I'm sure we got stopped out if we did. And the failure of that pattern to get back up and cross over that neckline, and then from there you can really get a nice swing trade going. The failure of that was your first tell. And if we look at, if we put the trend line underneath these pivot lows, and right about there, it not only lost the 21 and the 50 and the neckline on the same day, it just went further south. So stay away from this kind of chart. All the charts that we looked at on my greens list, they're all in uptrends. That's especially when the market itself is in an uptrend. You want to focus on those. Now, if the market gets a lot more difficult, if we get stuck in a trading range, which is quite likely, I think, into next year, if we get stuck on a trading range, then we have to open our horizon to other kinds of setups. But I don't think there's ever a market where I would be interested in this one except as a short. Okay, so that's Trade Desk. I'll do just one per person. So Diane wants to know about IONQ. So IONQ, if we go over to Black Box Stocks, I'll show you. OKLO. Okay, I forgot to show you one thing here. I'll do that in just a minute. So I'm keeping track of these alpha gold alerts in Black Box Stocks, which are very, very, very unusual call buys in particular names. You're only going to get stocks showing up with the alpha gold alerts, and we've traded a number of these. In other words, we get into the position right after the alert, and we've done really well. Google is one of those, and I'm forgetting the other one. There are two that did really well for us, Google and something else. IREN got one earlier today, and then we had IONQ and Crowd also showing these alpha gold alerts. So, and over in my charts, I've got an orange list here. I'm calling this the orange list, where I've got, we'll add OKLO. I'm keeping track of these alpha gold alerts and the day that they show up. So we'll mark this one as today, right? So OKLO. OKLO looks a lot like IREN, right? Bit long pullback below the LRC, quite steep in this case, and then a nice looking reversal today. I'm not opposed to trading this kind of thing, but you know, I can almost guarantee when you get up here into the 21 and the 50 and these range highs, it's probably going to get stuck right there. And that's not very far away from where the current price is. So If you're long IREN, you can hold it, start to trim up here at around 53. But from 48 to 53, it's not a huge move. And you've got to put your stop down like around, I would say under 42. So 48 to 42 is your risk, and 48 to 53 is your gain, and that's not much of a ratio. So I would skip it for now. Let's take a look at OKLO. So the nice thing about OKLO, in contrast, is that the pullback isn't as sharp, and it also seems like it has lasted a bit longer, which can be a positive thing because everybody gets tired of selling and all the sellers are out, and when nobody's left to sell, it can only go in one direction. This also is going to have some upside trouble, but I think it will probably break the downtrend. Probably test the 21 and the range highs, and then maybe it gets up here to the 50 above 120. So that's OKLO. So let's just take a look at the rest of these. APLD, which we bought shares of, showed a nice alpha gold alert on Friday, and it's doing well today. Oscar, same thing about a week ago, and it's up nicely today on news. Maybe that news was already known. Tesla gave one about a week ago, and it didn't do very well initially, up nicely today. Apple hasn't gone too far, but it is above the signal. We bought some CAT on Friday, some calls in CAT. It's doing off to a good start. And yeah, Crowd, we own Crowd already in our wealth building portfolio, so I was happy to see that get a nice hit today. And let's take a look at IONQ because that's the one that was asked about. So I ran IONQ and what was the other one? OKLO. They're all kind of in the same. They're not exactly the same space, but if you broaden out quantum computing, energy requirements, and data centers, all three of those stocks fall into that category, and they're all looking kind of similar. Now, I just said that you don't really want to buy down here off the 200 period moving average, but this is in an uptrend. It is uptrending. It's just that it's a very long pullback, and it got all the way down there. So you know what? I'm not a big fan of the quantum computing space right now. The fundamentals are just awful, still awful, probably will be awful for a while. But every now and then they get into these momentum moves, right? They start breaking out, and then the shorts start to cover, and the momentum players jump on, and then the guys that are really into AI start investing in this, and then it takes off. That could happen very, very soon. Volume balance isn't real good. MACD is where you want it, right? It is below the zero and it's starting to pinch. That's what you want to see. Long-term cycle is uptrending. Short-term cycles, they're kind of mixed. So it's not a perfect chart by any means, but I do think that if it does continue, it's going to have to test the 50, and then 55 is going to be a problem because that was a support floor, now probably a ceiling. So if you're okay from 45 to 55 is your trade, then I think you could trade this one. Okay, what else? Well, cold. We looked at natural gas already, so we determined that there's still more downside in that one. Well, Halo. Let's take a look at Halo. We are in Halo already, and I just like the whole biotech space. Although we're out of Labu now, we really milked that one for all it's worth. We had two big trades in Labu, both of which did well despite market volatility, right? Market was coming down, biotechs were going up, and we latched on to Labu initially. We came back down and hit our profit stop, and then we jumped back in a little bit higher, and I forget where we got out of that one. Anyway, still some good profits. So Halo looks great. You need to be long Halo. If you're not long Halo with me in the room, then you need to get long Halo right now because this is about as good as it gets. Okay, volume balance a little bit iffy, but recently much better. The MACD already flagged a buy signal down in this area, and it is confirming that by rising higher. There's no divergence there. The cycles are really mixed. And the long-term cycle, you don't really want to see that topping out, but from a pure price perspective and the fact that it is in the right sector, this looks great. So you've got this, double bottom, breakout, sideways flag pattern, breakout, consolidation above the 50 and the 21, and the resistance trend line breakout today, and it's just today's the first day of the breakout. This is likely to go into the mid to upper 70s, and it's only 71. So I like that one a lot. Yeah, you need to be long. Oh boy. Well, UNH is off my list. I looked at it earlier today, posted it in the room. It's a no-go zone, and I think PayPal is pretty much in the same boat. Yeah, just there's no need to buy this kind of stuff when you've got nice looking uptrends now with a lot of healthy pullbacks into support, and the price is above support. It's not way below all the support. Yeah, you're going to get little 2 or 3 days of some fun bounces here, and if you want to play those, by all means, go ahead. But that's not the kind of trading I like to do in a bull market like this. So it's on my no-go zone. MP, we had a trade in last week. I think it either hit our profit stop or I don't recall how that trade came out. We were in MPL, the leveraged version. So it's building a base down here, which is a positive thing. Volume is starting to come in a little bit more on the bullish side. That's good. MACD has hit a fresh buy signal. The cycles actually look pretty good, right? The long term is rolling higher off the lows. Midterms are topping out. Don't really want to see that, but it's mixed with the long term, and that's probably why. I mean, I'm not a huge cycles guy, and I'm still kind of learning the ropes with that. But that's probably why it's stuck in this base. Now, it is possible that this is a bear flag, right? Downtrend. Where's my marker? Big sharp downtrend, bear flag, and then another downtrend lower. That's possible, and MP has not been a good trade. It's not been reliable as a consistent trending stock, except to the downside. So until that changes, we can trade these little pops, which is what we did last week. And this is a pop also today, and it's probably going to get back up here to like 64, and it's at 58. That's a 10% move. You could leverage that, use MPL or use some calls. But as far as it getting past that and getting way back up here above 90 again, I'm not so sure. I'm really not so sure. And that's it is a victim of the fear around AI, and I've been saying this for a little while now. There's so many of these little players. MP's a materials company with rare earth metals, but if there's no demand for AI and they can't make a profit out of it, and it's just way too much energy demand, then is worth it. Margins are getting squeezed. There's not going to be any demand for rare earth metals, right? You're going to see a lot of the little players start to go bankrupt or get bought out or whatever. So it's risky. Yeah. So I would say it's okay for a little pop, but keep your stops at a reasonable place. Move them up when you can, and take profits when you get up to resistance. Let's do two more. SMR. So this is a nuclear play. It's in a downtrend. It's way down, way down there. And I don't like SMR. The one that, well, OKLO looked pretty good, right? It's in a better space. There was something else that I thought, it's on my watch list, not my greens list. Maybe it is OKLO I'm thinking of, or IREN. But yeah, I would skip SMR. There's way too much downside momentum, way too much distribution down here off the lows. Cycles look pretty good, I have to say. And the MACD is pinching well below the zero line, which is, both of those are things you want to see to confirm a bounce at least. But yeah, I would do IREN or OKLO for the same reason, the same sector. Let's do one more. Unity, which got a big pop on that day right there. Big pop on some news, and then it came right back down again, pretty much with the market. Bouncing back up nicely. Let's get rid of these lines. So volume balance down here looks really good. Really good. MACD's forming like a cup and handle. That's kind of nice. When you see a technical indicator forming a price pattern, pay attention to that. When it's a bullish price pattern, that's a good thing. Cycles are a bit mixed, but as I said, I'm not paying too much attention to cycles because I'm not sure I'm actually reading them properly. It's a new thing for me. But in terms of pure price, I kind of like what's going on here because you've got consolidation, right? Constructive, bullish consolidation. Nice looking uptrend. Now we're more in a trading range. However, the lows are getting higher. The highs are getting a little lower, so it's consolidating. Now it is getting very close to testing the resistance line again, so it could roll over right back down again to the bottom. But I think we're at the edge, the front edge of a 2-week, maybe 3-week consistent rally in the overall market, and that should bring up software like this too. And so a pretty good bet that it will break out above 42, and then it was going to test the 44, and maybe before all is said and done, 46. All right, guys, I'm going to let you go. God bless everybody. Have a great rest of the afternoon. I'll do my production thing on the video, put a link in both rooms, and we'll continue trading. We've got a good hour left, the power hour left. God bless everybody. We'll see you back in the room in a little bit. Bye for now.